Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So again, we have this very important psychological level. And why am I talking about this 200 SMA so much? Well, I will tell you that there is no more significant moving average in any market, stocks, futures, Forex, than the 200 period simple. It's the most psychologically significant moving average. If we're trading at it, near it, through it, above it, below it, you will see it talked about on television, on the internet, everywhere. It's just a very common level that a lot of people see, which makes it hugely psychologically significant. Okay, so I know that I'm approaching a couple things on the dollar index, the dollar yen right now, which is a ceiling that has developed basically between 99 and 100 on the spot, which is correlating into, and you notice the relationship between the YUK and the dollar yen is a sympathetic one. Okay, so the same ceiling I'm seeing on the spot is developing on the YUK. I am absolutely shopping put options right now in this market. So if you head on over to ise.com/FX and you type in the YUK, okay, you can go ahead and start to get a read on the personality of this market right now. Okay, and let's talk about this for a moment. The 52-week high in terms of volatility, and this is just using the data from the ISE. We'll talk about how to gauge this on the price chart as well. The 52-week high is 29.28, so almost 30. The 52-week low is 9. Right now we're trading, or historical volatility, I should say, is at 17.11. Again, this is all from the information at the ISE. So I know we're actually on the lower end of this, aren't we? We're actually on the lower end, just below, say, the median. So the lower end of historical volatility, or just below, like I said, the median. And I also can take that volatility and take a look at what's been happening in price action here. Are we quiet on price action right now? Probably not the quietest I've ever seen. Let's take a look at the spot one more time. Probably not the quietest I've ever seen, but you can see as of the last, let's see, 1, 2, 3, 4, 5, 6, 7, 8, about 10 trading sessions, we have been consolidating and testing this 200 period SMA. This is another little cluster, isn't it? By the way, we had one before that and I've done this put option play once already. You can see that here. We got quiet. I was shopping puts throughout this entire time, and finally got my break below. Look at the way it broke, though. Look at the volatility with which it broke down. Okay, those puts did very well. I'm looking to do the same thing again here as we consolidate. Again, right now, just below 99, just below 100. Hugely psychological levels on the dollar yen at the psychologically significant 200 SMA. We go back to the YUK option symbol, and that's what I'm doing. I'm looking for puts. Now let's talk about how we would shop this really quickly. When I'm shopping for this option here, knowing that I've basically approached the ceiling, knowing that the historical volatility is on the medium to low side, what I need to sort out is strike price. That's one of the initial issues. I need to sort out strike price, where's my location, and how much time am I going to give myself. Well, from the past, I know that this could take anywhere from about 2 or 3 weeks up in this area, if that, even that long. I think the reaction based upon where we are right now is going to come fairly swiftly. So I don't mind looking at perhaps, and even this might be a little more than most people are willing to take, but I don't mind looking at something as close as May. June would be fine, but I don't mind looking at something as close as the May expiration. I think it's a May 16. So if I'm looking at May, I know I'm going to pay a little bit more because I'm giving myself some extra time. Okay. Then I start to look at what are my strike price. Where am I going to position myself? I don't want to be in the money, because if I'm going to be spending that kind of premium, I'd rather give myself more time than being in the money, because I'm looking to capitalize again on that clustering, on that coiling, and I'm really relying on that uncoiling, that's springing to increase my volatility and therefore the value of my option. So I'm looking at puts, and I can see the last time we got down here is 94. I don't need my option to be a 98 or a 97 option. If we get to my strike price or come close, we're going to see an incredible return on a potential. I never want to guarantee anything. Obviously, everything is subject to what the market is actually doing and how it gets there. Moving to 94 in 2 sessions and moving to 94 over the course of a week is going to be very different in terms of the volatility, okay? So how quickly we get there is going to have a huge difference. If we kind of trickle down to 94 versus the way we did it back here, makes a big difference, okay? So how we get to our strike is going to be just as important as getting there. And we don't necessarily need to see the option in the strike to see a return, okay? I want to reiterate that. So I don't have a problem at looking at, say, a 94 put. I'm going to pay a whole heck of a lot on a 94 put as compared to, say, a 97. Okay, I forget a 98. I'll even look at a 97. The 97 bid-ask is 0.7 by 0.82 right now, okay? And that's on the April. If I go out to, the May, a little bit more time, right? And I look at that same strike. Okay, again, that 97 for May, I'm looking at, and again, this is straight off the ISE website, 1.53 versus 1.65. Okay, a bid of 1.53, an ask of 1.65. Okay, so 153 by 165. That's my 97. Now, what if I go down to 94? What am I doing by going down to 94? Number one, I know there's support at 94. Number two, I know we've been there before. Any move lower towards 94 is going to help me out. If it does so in a very volatile manner, even better. My 94 bid-ask right now, again, for the same May, is 0.84 by 0.85. That's my bid-ask. So you see the difference? 1.53 by 1.65 is a 97. 0.84 by 0.85 is my 94. Big difference. Okay, and is 94 that far out of the money? Well, right now it might seem completely far out of the money, but are we capable of getting down there? Sure. Maybe you want to look at a 95. Okay? So one of the things that, again, I know is a psychological issue is everybody has a certain amount of investment they want to put behind their option position. To me, I'd rather put your horsepower behind giving yourself some time versus this insistence that most new option traders have, or many times misguided, have is being in the money. Now, there's sometimes that being in the money is part of the strategy, and that's fine. But for my strategy, being in the money is unnecessary. Looking at logical support and resistance if the market moves in the direction that you're perceiving it will be, and giving yourself some time to get there is worth paying for time. And in that way, I'm able to take those dollars and allocate them towards time versus location or strike, as I also put it. It's either time or it's location or strike. I'd rather use time. But notice I'm not talking about a 90 or an 88. I'm not talking about way out of the money, although those will increase in value too. A way out of the money option will increase in value as well. I mean, you can go as far out as, say, 85, 84, I think. Let's see, for June, you can even get down to 83. A lot of times, if I'm willing to give myself some time and I think there's a real shot, let's say, for example, I think there's a real shot at going back to 90 or 88, I'll give myself some time. I know a move like that isn't going to happen quickly. So what can I do? Gosh, I can go out to a September or even a December. Okay, so I'm going to pay for time, but if I'm looking at it, say, an 83 or an 88, I'm not going to pay for the strike that much. I'm not going to pay that much for a put going down that level. So you see how I decide how to allocate my funds? Okay?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.